So good evening, everyone, and thanks a lot for joining us on a Friday evening at 8 o'clock. Appreciate the interest you guys have shown, and wish you guys all the very best. During the course of this particular interaction, I would request all of you to keep your windows or rather the videos off, as well as keep all your audios on mute. I have already muted, all of you, but request is to keep also even your videos, switched off, right? So that everybody can focus on what I am talking about rather than looking at others. Okay. So welcome all once again. Let us move forward. In this session today, I'll be covering few things. I'll just take you through what's the agenda for the session and then we'll move on. So, first part, what we're going to cover is, why CFA, what is CFA and why we should do CFA or why someone should pursue CFA as a course. Then there are some changes in the program. I would like you to, take you through, I would like to take you through all those changes. Then, of course, we will get into CFA level 1 and then a bit of Q&A if you have any questions. And then, of course, the demo. I'm going to today teach about topic in portfolio management. It is about computing portfolio variance and the efficient frontier. And then we also have a quiz, to see how many of you were attentive when I was actually teaching the topic. And the winners of the quiz also get certain vouchers. Okay, so suggest that you stay on till the end. It is going to be, I hope it is going to be worthwhile for you. So let's start off. What is CFA? CFA is it's a professional qualification, 3 levels, and it is offered by the CFA Institute based out of USA. It is basically the gold standard in investment profession. So anyone who works in the stock markets or who manages money or who works in the currency market, derivatives market, any kind of capital market, people in those professions or those kind of careers actually take up this particular qualification, CFA, which gives them a lot of knowledge, right? There are about close to 2 lakh charter holders across about 160 odd countries around the world. And the way to earn this particular CFA charter, so the word, you earn the degree is called as charter. Now you pass 3 levels of exam, which is, you pass the 3 levels of exam. And then after passing the 3 levels, you also have to work for about 4,000 hours over 3 years in an area that is related to what you've studied, anywhere in the markets, related to the markets. Now, this 4,000 hours can be along with studies or before studies or after studies, but you need to have 4,000 hours of the experience over 3-year period in a related area. And then after that, you submit 2 to 3 references and then you get the charter. So now CFA level 3 pass and CFA charter holder, is there any difference? There is no difference from a qualification perspective, but from a designation perspective, a level 3 pass candidate is known as, CFA level 3 pass. And a charter holder, someone who is qualified, passed all the 3 levels and also has that relevant work experience is called as a charter holder. Now, why do people take up CFA? Primarily, as I said, 6 reasons. It is a very, very well recognized qualification across the world. It gives you tremendous amount of knowledge specifically in core finance, in areas like investment management, portfolio management, the fixed income and so on. And it allows you to go into a lot of areas within finance, like asset management, equity research, banking, so on and so forth. And this can be done by students or it can be done by people who are currently working in a job. It significantly increases your monetary compensation that you get from your employer and very, very high ROI. Now, how much does it increase? I will show it to you, right? So in India, you actually have all top companies in finance domain recruit CFAs. Salaries for level 1 and level 2, typically level 2 pass candidates are between 9 to 13 lakhs. And for level 3 pass candidate is 10 to 17 lakhs. Again, please note, these are broad ranges, not that everybody will get exactly in this range, but a large number of people will get in this range. And average salary for someone who's also a CA or an MBA plus level 3 pass is around 20 lakhs. In India, the exam is conducted in India across 23 cities. Recently, 7 new cities have also been added. Now, coming to the compensation part, right? 83% of the people who chose to do CFA believe that they're doing this for increasing their knowledge and skills. And 38% is the increase in salary from when student from level 1 passed and cleared, moved to level 2. And charter holders with 6 years experience on an average earn about 28 lakhs per annum. Right. So this is what I was telling you. What is the value from this course in terms of monetary compensation? Now, who can enroll in this? Anyone who's finished their bachelor's or undergraduate degree, or someone who's in the last 2 years of bachelor's degree. So if it's a, if you're in a 4-year engineering degree, then last 2 years. If you're in a 3-year BCom or BBA, then last 2 years, right? In last 2 years, you can write level 1, but level 2, you can write only after you've finished your undergraduation. There is also a third requirement, which is, if you don't have an undergraduate degree, but you've been working on your own and all of that for about 4,000 hours and so on. But that typically does not apply to most of us, in India, where, somebody does not do an undergraduate, but, does a business kind of a thing. Typically, we don't see that. Right. Now, what is the total cost of the course? Now, the course is slightly on the expensive side. I won't say it is very expensive because the return on investment is actually very high. So if you look at level 1, right, you have to have a enrollment fee and then a registration fee. Now, enrollment fee is a fee for, registering with the CFA institute, and registration fee is per exam you pay registration fee. Now, registration fee is also of 2 types. You have an exam fee, basically. Let us call it as initial fee, exam fee. Now, exam fees of 2 types. You register 3 months before the exam, there is one fee, which is a higher fee. You register 6 months before the exam, it is a lower fee. So if you look here, for level 2, if you register 6 months before exam, it is $940. Whereas if you register 3 months before exam, it is $1,250. So total, and it's all got to be paid in dollars. Okay. So your, initial application fee plus exam fee put together roughly comes to about 3.25 lakhs. And then you have coaching fee, which is about another 1.8 lakhs. So totally it can come to anywhere between 4.5 to 5 lakhs is the total cost. However, the thing that you all have to notice, it is 4.5 to 5 lakhs over a 2.5 to 3 year period, during which you will actually earn a lot more because of this very qualification that you have. Right. So that is something that is to be kept in mind. Now, what are the dates? The exams are held, for level 1 4 times a year, February, May, August, and November. Now, for the August exam, for the November 23 exam, the exam dates are sometime between 11 to 17. Early registration window, that is 6 months prior, is closed already. And for August exam also, what is 3 months prior? August, July, June, May. So August exam, you cannot write now. But, November exam, you can still register with the standard window, which is that higher fee of $1,200. You can register it till 8th of August. So November exam, if anybody wants to write, you can register till 8th of August. February exam, you can register, till 13th of July at a lower fee. After 13th of July at a higher fee. Same way, May exam, again, they will open the registration window subsequently as we move forward. Right. Now, what is this whole program change and significant changes in 24 and 25? I just want to highlight to you. There is a new curriculum that is going to come up from February 24, and this is going to be more practical. Now, there are going to be certain changes, but 80% of the syllabus is going to be the same, largely, right? And you will be added 2 new self-paced modules on financial modeling, equity research, Python, and AI at level 1 and level 2. These are self-paced. There is no instructor. You have to do them on your own, and you have to, there is no test on this. Okay, you're not going to be tested on them. You just have to complete these models and these self-paced modules. Then for level 3, which is from 25, when the changes are going to be implemented, you also have electives. Right. In addition, you also are going to get additional marks, and there is an improved badging strategy. What do they mean by badging strategy? They're saying that, level 1 pass is going to be called something. Level 2 pass is going to be called something. Level 3 pass is going to be called something. They're going to give new designations or new badges for people who clear level 1, 2, and 3. Now, there are some people who are looking whether they should write in November 23 or Feb 24. See, as I said, August 23, if I just go back a couple of slides, August 23 anyway is closed. So it is not there. August 23, you cannot write now. I mean, unless you have registered earlier. Right. November 23, you can register till 8th of August and still write. And when you register till 8th of August, the fee for 8th of August is, if you register today, any day before 8th of August, the fee will be about $1,550. Right. Whereas, if you wait for November exam and, you don't write the November exam and you're planning to write the Feb 24 exam, which is going to be new syllabus, you can need not pay $1,550, but you can pay only $1,290. However, the key thing to note is you're paying only $260 extra. But the issue is someone who's in, second year or third year of BCom, or more likely third year of BCom, or someone who's already pursuing a job, there are still 5 months for you to study for the November exam. So this is not a rocket science. It needs effort. It needs concentrated efforts. I'm not saying I'm not saying it is very easy also. It is decently, it is moderately easy, moderately tough kind of a thing, right? 5 months is sufficient. There is no point that you keep delaying your attempts and in February 24, something else will happen. Somebody in BCom, they'll have some exam, or somebody who's currently pursuing a job, they'll probably have a quarter end or a budget year end or something like that, right? So there is no point postponing your attempts just for sake of $200, $260. I know $260 are important. However, if you're planning to pursue the course, there is never a good time. Every day is a good day. Okay, every day is a good day to start. So, which is why I strongly believe that for those of you who still have 5 months time now to prepare for the November exam, even November exam, you can register now, enroll now, pay that fee and write the exam. There is enough time to prepare. Right. Now, my suggestion is that. Right. Now, in addition, scholarships are also available, but these scholarships are typically, scholarships for calendar year 23 are already over. The scholarships are now open, for calendar year 24. Scholarships will open sometime in September month. Right. So people who get the scholarship, there are two kinds of scholarship, access and women's scholarship. Access is where, based basically on the financial situation and all of that, you have to write an essay and they will reduce your exam fee to about, from $1,200, from $950 to $250. And the registration fee is completely waived off. Women's scholarship, the same reduction is about $350. See, eventually what you will save, right? You will save easily about $800-900 if you get the scholarship. Okay. But again, for scholarship, if you apply in September, that scholarship will be applicable only for May attempt. Right. So my suggestion typically is, unless you are, planning to write, you're very sure that you're going to write in May, don't wait for these scholarships. However, if you're already, let's say you're a student who are currently in first year of BCom or BBA, then obviously scholarship is a very good choice. Right. And for certain colleges and certain MBA institutes like IIMs and all, where they are affiliated to where they have certain kind of recognition in the CFA institute, the exam fee is also reduced to $50. Right. Now, this, as I said, is a 250 word essay. It is a combination. The scholarship is given based on financial need, obstacles overcome by the candidate, your interest in finance, your interest in CFA, academic accomplishment, so on and so forth. CFA exams are in 3 levels, as I said. Level 1 and 2 are largely MCQ based. In fact, all 3 are MCQ based, but 3 has some essay questions also. And level 1 is simple MCQs. Level 2 is case study based MCQs. Level 3 is also case study based MCQ. Now, these exams are, level 1 is basically 2 sessions. So all these exams, right? All 3 levels are of 2 sessions, morning 1, afternoon 1, or something like that. There'll be a gap in between, and then you can attend the second session. And each session is 2 hours, 15 minutes, 135 minutes, and you'll have 90 MCQs in level 1. In level 2, you have 44 MCQs. And in level 3, you have, MCQs, 44 MCQs plus essay type questions also. The pass rate is typically about 40 to 50%. Level 1 is conducted 4 times a year, level 2, 3 times, and level 3 only 2 times a year. Right. Now, course curriculum, primarily this particular curriculum of CFA talks about, ethical standards, very, very important topic. Then rest of it all is related to finance, which is quantitative methods, economics, financial statement analysis, corporate issuers, equity investments, fixed income, derivatives, alternatives, portfolio management. And you see here, other than corporate issuers, financial statements, and quant, all other topics are covered across 3 levels. So you will be going 1 level deeper in level 2 compared to level 1, and 1 more level deeper in level 3 as compared to level 2. Right. Now, why OneFin, how OneFin? So we, OneFin by Indigoland, we have tied up with Kaplan Schweser. Kaplan is the world leader in CFA prep, and they have been doing this for about 30 years. So what we offer in association with Kaplan is our online lectures, which are available on our website and app. These are recorded lectures, and along with also live revisions. And all our lectures are by CFA or FRM charter holders. Then we give you access to Kaplan original printed books, and of course the Kaplan portal. Now, this portal is very important because all the CFA exams are MCQ based exams and are conducted online, and they are conducted in a computer center. So if somebody were to prepare or practice for this exam, they should do it online practice. And Kaplan portal has thousands of questions across levels, which you can practice very well and get confidence on how you should answer, how you should prepare, and how you can actually go and attempt the exam. Right. Now, we also have, a free trial on a website, right? So we provide a free trial on a website for both the classes that we conduct, which are online, lectures, as well as the Kaplan's website. There is a 7-day free trial. So I'm actually sharing that screen with you, which is, the Kaplan website. So this is the Kaplan website. Please see Kaplan website. It is called schweser.com/CFA/free study materials that free trial. We'll share this link with you. And in that, you actually select a level, when are you writing the exam and which level, and then, you can get a 7-day free trial. So this is something that Kaplan themselves offer. So I would strongly suggest that, students who are interested in, knowing more, take up both the, free course that we give, as well as the free trial that, the CFA in the Kaplan Schweser website also offers. Right. So that is what I would strongly suggest. Right. Now, moving on. CFA level 1, what do we offer overall? We offer 120 plus hours of video classes, live revisions, Schweser Notes. Schweser themselves also give some videos, but again, they're Schweser videos. Then we offer a question bank, then mocks, then QuickSheets, basically some kind of formula sheets and all of that, and online doubt resolution forums, which are there on our website. Anybody can post a query and we will respond. Right. Now, so the next step is, working towards this 200 rupees Amazon vouchers. For 3 people, we'll be giving this gift. And this is given to the people who will listen to my lecture now, which is basically what this workshop is intended for, and answer the questions at the end of this particular lecture. Okay. So this questions will be given in a Google form. You have to respond it in the Google form. And, we will keep the Google form open for about 10 odd minutes, and you have to respond within that time. All the questions will be asked from what I teach here in the next 40 minutes or so. Okay. So any questions so far with respect to the CFA program, I am more than happy to take before we actually get into the explanation and we get into the details of what the portfolio management, portfolio variance topic is. Please feel free to ask questions. I'm more than happy to respond. How good is it to get someone into CFO or CEO position? I think it is good enough. CEO, CFO don't just require skills of a CFA. They require many other skills. But I think the skills that CFA Institute provides are fairly important, fairly relevant. In which country is CFA more valuable? See, mostly it is in USA, Europe, and India, of course. Even in India, if you're working in stock markets or a PE fund or a VC fund or any of the top employers which are relevant to finance sector, it is very important. Next, currently I gave my exam in both groups. So if I enroll now, will my first attempt for CF be due? So if somebody has written CA inter exams in May 23, you can write in November. But unfortunate circumstance, if you may have to write your CA exams again, then the dates will clash. So I would suggest that you evaluate November if you're confident that you'll clear your exam. Otherwise, look at February. Shouldn't we prefer CFAI core readings instead of Schweser books? This question asked by Akshit Taneja. Good question, Akshit. See, the point is CFA Institute material is extremely bulky and it is not genuinely student friendly. Schweser books are extremely simple. They simplify a lot of topics and give a lot of stuff in a very easy to understand manner. And they give you enough practice questions and all. So most of the content of the CFA, in fact, the question and answers of the CFA Institute themselves are also covered in the Schweser Notes. Right. So I don't think Schweser Notes are in any way inferior. In fact, Schweser Notes are far better than the CFA Institute material because I myself also studied through Schweser Notes. Then somebody's asked me, Adiyanath Prabhu, after completing CA, can we directly take up CFA or should we do some undergraduate course? See, I think CA is recognized as a course and I think you can take up CFA. But I would always prefer that you have an undergraduate course also with you so that, there is never an issue. But yes, CA can be treated and, you can do CFA. Next, Kashish Mehta has asked me, I am planning to give level 1 in May 24. When can I purchase study material and how to apply for scholarship? So scholarship and material, please go to the CFA Institute website and scholarship ke liye, the window will open in September. Apply for the scholarship. And the study material, so you can register with us, sometime in August or September, and we will be able to provide you coaching for May 24 exams. The new material is not yet released. It will be released probably in the next 10 days or so. Once that is released by June, July is when we will start dispatching the new material to people who enroll for Feb and May 24 programs. But you can definitely start, your process in August or September once the window for scholarship opens. Sir, I have given CA May 23. So which attempt is suitable for me? My suggestion, if you're confident of clearing, then obviously November is suitable. If you're not confident of clearing, then May 24 is suitable. Or even February 24 is suitable. Feb or May 24 is suitable. Sir, can you elaborate about women's scholarship? So women separately get a scholarship, which is for, in order to encourage them. So they can, apply and state how the scholarship will help them and how they will be able to take advantage of it. And, if the committee considers it good, they will give a scholarship. Is CFA good for FP&A profile? No, CFA is not good for FP&A profile, Saket. CFA is more to do with finance and more to do with markets. FP&A is more to do with accounting and bookkeeping. Then Subdeep Singh, how good is CFA's career change if I have experience in different fields? No, so unless you are planning to move into stock market related stuff, I don't think just doing a CFA will help you make a career change. I'm not saying it will not, but I'm saying very unlikely chance. See, especially if you have 10 years experience in, let's say, in some other domain, then suddenly shifting to finance with CFA, I don't think is the right way. You probably need to do an MBA somewhere in a top tier school, which will help you make career change. But yes, it is possible. I would, 90% it is not possible. 10% there is a possibility you can change just by doing CFA. Or if you want to work on your own, definitely yes. Then Kashish, I'm planning to give in May 24. When can I purchase? I already answered. Then Deranin, would you suggest switching from CA Inter for someone who's more into finance than tax or audit? Yes, if you're interested in finance, I think you should do it. If you're not at all interested in tax or audit, then I definitely think that this is an area that you should do. Saurav has asked me, I have recently applied for CA Inter, expecting to pass, want to give exam in May 24. It is okay. Yes, absolutely okay, Saurav. Sanjana, CMA students can do it. Of course, Sanjana, CMA students can also do it. Kashish, I think I responded. Ashmita, is CFA better to be done after some work experience? No, I actually don't think so. I actually think you should start doing CFA from your undergraduate degree because it helps you signal to people that you are interested in financial markets and it also helps you get a lot of knowledge of finance. Right. Miti Shah, can we apply for scholarship first before registration or we have to register first and money gets refunded? No. So you have to do it before registration. You can do it before the early registration window. And even if early registration window closes and you have applied for scholarship, they will still allow you to do the early registration window, pay a lower fee. So yes, there is no refund process. You have to first apply and then register. RS Pramod, can a BCom degree holder from IGNO be eligible for CFA? Yes, you are eligible. Do we need a passport for registration? Akshit Taneja, see, you need a passport, but the issue is they ask you the name in the passport. They're not asking you the passport number. So if you're very sure what is going to be your name in the passport and what you're filling it in the CFA Institute application form, then yes, you don't need a physical copy of the passport. That's not required. Difference between CA and CFA and ACCA. So CA is more to do with accounting. ACCA is global CA. It is UK based qualification. It is slightly more flexible than CA. And CFA is more to do with finance and financial markets, whereas CA and ACCA are more to do with accounting. What is the amount to be paid for coaching? So the amount to be paid for coaching is, I'll just take you to that slide. Yeah, 50,000 for level 1, 60,000 for level 2 and 70,000 for level 3. We right now are offering level 1 at 41,000, 42,000 only. Also, you get a 10% discount on that. We have put approximate numbers for coaching fees, 50,000, 60,000, so on. Right. Saurav, I'm in last year of BCom from IGNO. Can I give exams? Absolutely, you can give. No problem. Then, can we have access to CFA material without registering for the course like ICA materials? No. No, Jay Kripa, you cannot have access to CFA materials without registering. Sanjana, which one is best for going into taxation? CPA or CFA? CPA is only better. Okay, I mean, in India, CA is better. In USA, CPA is better. CFA has got nothing to do with tax. Krishna Panjay, after CA Inter or before? I would strongly suggest any time. It doesn't matter. If you're, if you're currently pursuing CA Inter, I would say concentrate on CA Inter and then do your CFA. If you're planning to write your CA Inter exams in last year of BCom or something like that, then please finish CFA level 1 before that. After CFA level 1, can I get a job? Yes, Saurav, you can get a job. Is there any ranking in CFA? No, there is no ranking in CFA. Rivas, good you spoke of Kaplan. None of the other institutions are providing. Thank you. Thanks a lot, Rivas. Bakul, is international passport must? As I explained, passport, the name in the passport is must, not the passport number. Okay. Then scholarship is not available for Feb 24. See, September, the Feb 24 attempt, right? The early registration window closes sometime in August. So whereas the scholarship will open only in September. So Feb 24 is unlikely, but May 24 definitely it is available. This was a question asked by Sujal. Then Srihari, I have experience in commercial banking. After CFA, what were relevant opportunities for me? You will be able to grow in commercial banking, move to wealth management, or move to funds, or move to markets, move to treasury, and so on and so forth. Next, Ranjit, is CFA good option for someone who's completed graduation because there are 6 months gap? No, they don't bother about your gap. You can do your CFA now also. It doesn't matter, Ranjit. You can do CFA whenever. Saurabh, can you help us get job after level 1? See, I won't promise any placement, but I will definitely forward your resume to all my associates, friends, whoever are planning to recruit. Will OneFin introduce classes for level 2 and 3? Yes, Varun Chandan, we are planning to introduce level 2 classes sometime in the next few months, next 2-3 months. Sir, CA, CFA, ACCA, which is better? I already responded, MD, which is better. No, I said each one is different. So CA is more to do with Indian, if you want to work in Indian accounting side. ACCA is where you want to work on global or international accounting side. CFA is if you are planning to do in markets. So I don't think you can compare one with the other. But if you get all 3 qualifications, nothing better than that. Can we pursue it along with CA articleship? Yes, Krishna Panjay, you can pursue it with articleship. Which is better in terms of value and scope? See, this is a very tough question, Akshat, because simply if anybody asks, is mechanical engineering good or computer engineering good, how will you respond? I mean, each one has its scope, right? Same way, CA, but here the advantage is you can do both CA and CFA. So CFA is more to do with markets and CA is more to do with accounting. So I would strongly suggest do both. What is the process for registration? Pavan Brahmarendra Kumar, please go to the website cfainstitute.org. and go there and complete the registration process. What is the amount to be paid for coaching? Kashish, as I said, for level 1, we charge roughly anywhere between 42,000. Okay, does CA final SFM, FSCM will be helpful in CFA level 1? So, Pramod, I myself teach CA final SFM, and I think it will be only 20 to 30% helpful for CFA level 1 because a lot of topics are different in level 1. So, probably, given your knowledge of accounting and SFM, 50% or 40% level 1 will be possible, but balance 60% you'll have to study. Will we conduct this webinar? Prajwal, you please share your, send an email to support@indigolearn.com, and we shall forward you the link to this webinar. So don't worry about it. What are the opportunities for level 1? What is the minimum salary? Minimum salary is about 5 to 6 lakhs with BCom plus level 1. And job opportunities, you'll work as an entry-level analyst. CFA along with CFP. See, CFP is slightly easier than CFA is my understanding, but CFA is a far more valuable qualification in my opinion. Is there any subject in CFA that will conflict with CA final preparation, like more time? No, SFM and CFA level 1, there will be a lot of commonalities. As I said, about 40-50% is common, but 50% you have to study on your own for level 1 CFA. Is CFA helpful for an investment banker aspirant? Rakesh asks. Yes, it is helpful for an investment banker aspirant. Can I get Schweser material without opting for coaching, Kashish? No, we don't sell that. We don't sell that, Kashish. We sell only along with coaching. Then is it good to do CA plus CFA? K187537. Yes, it is good to do CA plus CFA. Guys, so I think I've answered a lot of questions. Can we become chief financial analyst in a reputed company with CA? What is chief financial analyst? I've never heard of such a term. Chief financial officer or an analyst. Okay, financial analyst is, there's no chief financial analyst as far as you know. But CFO, in order to become CFO, I think CA is good, but if you have CFA, it will add a lot of value. Guys, I think we'll pause the questions here. Let me take you through the, topic, what I have planned for the syllabus, for the discussion for today. Sir, salary for BCom plus CFA level 1 student in India, about 5 to 6 lakhs in India. Ranjit, that's your question. So guys, I am closing my chat window. Please ask questions after this, or you please raise questions. Priya has asked me a question. Their faculties are non-charter holders. How about OneFin faculty? All our faculties are 100% charter holders. There is one guy who's not a CFA charter holder, but he is a FRM and ISB and IIT Bombay. Right. So most of my faculties are charter holders, and there is one guy who teaches economics who's not a charter holder, but it's a CA. But everybody else is a charter holder. Can we get a job after CFA level 1? Yes. Is your coaching available on EMI? Yes, we have a coaching facility on EMI. You guys can explore that. You can click the EMI option. You can check it out. Guys, please stay on. No, I'll let me finish the topic and then you can ask. I'm closing the chat window. A lot of questions, guys. Thanks a lot for asking so many questions. It really encouraging to see so many questions being asked. Coaching available on weekdays or offline classes. It is all our classes are recorded, so you can take them whenever you want. So there is no such thing like live class. It is whenever you want. And is it okay to read only Kaplan? Yes, it is sufficient to read Kaplan, Nitisha. It is CFA Institute material is not required. I am back. I'm shut the window for chat. Okay. So okay. So now let me come to the topic that I'm here to discuss. So we are going to talk about risk and return in portfolio management, or rather portfolio variance. How do you compute the variance of a portfolio? A lot of you would be knowing what is the term variance. It is basically square of standard deviation. So first, let me take you through the very simple thing. There are two stocks called A and B, and one has a return of 10%, other one has a return of 12%. Now, please note here I'm talking about return, stock return. So return can be over a day, over a month, over a week, or over a year. Here, let us, for argument's sake, is annual return is 10%, right? And return of what? Return of the stock price. So the stock is at 100 on January 1st, it is at 110 on 31st of December of that year. Now, in a portfolio, if we create 50-50 weight for A and B, A has 10% return, B has 12% return. If you put 50-50 ratio, the overall return of the portfolio is 11%. How is it 11%? You multiply 10% into 50, that is the weight of 50. 12% into 50, that is half the portfolio is 50, 12%. So you get 5% plus 6%, which is 11%. Now this is the return. This is the expected return of a portfolio which has A and B, and with A giving an annual return of 10%, B giving an annual return of 12%, with A and B weights as 50-50. Now, how do we compute the variance or a standard deviation of a portfolio which consists of this A and B? How do we compute the standard deviation or variance? So this is the formula. Some of you who are studying CA might know it, or otherwise also it is not an issue. The formula is standard deviation is square root of something. So basically, if you square on both sides, you will get 1 second. So if you square on both sides, this square root will go away, and variance is what you will have. Variance is weight 1 sigma 1 whole square, or weight 1 square sigma 1 square, plus weight 2 sigma 2 whole square, or weight 2 into sigma 2 whole square, plus 2 weight 1 into weight 2 into covariance. And covariance is also written as P. Here this alphabet P, this is pronounced as rho. It refers to correlation coefficient. Correlation between the two stocks 1 and 2 into standard deviation of 1 and standard deviation of 2. Now coming back, let us say I also tell you that the risk. So in finance, right, the word risk is very, very similar to the word variance, or variance is risk is measured by variance and standard deviation. So if I tell you what is the variance, standard deviation is you take mean, right? Mean sigma of every single number minus the mean whole square by n. That is the formula for standard deviation, right? Square root of sigma of x minus. So square root of sum of x minus x mean by n. This is the formula for your standard deviation. Now, for these two particular stock returns, if we compute the standard deviation, let us say the standard deviation is 12% and 14%. Now, if there is a portfolio for which we have computed the return as simple weighted average, how will you compute the variation or the standard deviation of the portfolio? Will you again do a simple weighted average? The answer is no. You will compute it using this formula, which is W1 sigma 1 whole square plus W2 sigma 2 whole square plus 2 W1 W2 sigma 1 sigma 2 into correlation. Now, please note this formula looks very, very similar to A plus B whole square formula. A square plus B square plus 2AB. And you also have in the 2AB, you also have something called correlation. So if I tell you that the correlation of returns between these two stocks is, let us say, 0.5. Then, if the correlation of returns between these two stocks is 0.5, then the standard deviation of this portfolio, or the variance of this portfolio, standard deviation is square root of variance. Okay. How do I compute variance here? Variance variance, what is the formula that I have here? W1 sigma 1. W1 refers to weight 1. So variance is weight 1. Weight 1 is 50% into sigma 1. Sigma is the term used for standard deviation. Please remember the statistics that you have studied in class 11, 12 or BCom or wherever you have studied. Sigma is for standard deviation. W1 into sigma 1 whole square plus W2 into sigma 2 whole square plus 2 into W1 into W2 into sigma 1 into sigma 2 into the correlation between those two. Now, why are we adding correlation? What is this whole logic of correlation? I will explain it in some other section or some other time. Right now, for now, please understand this correlation will actually help in reducing the overall variance of the portfolio. So if you see, just one sec, I'm simplifying it, that's all. Okay, so if you look at this, the variance has come as 1.27%. If you do standard deviation, which is square root of variance, you'll get it as 11%. So you see, because the correlation between these two is 0.5, the variance of returns has reduced from A has 12% variance, B has 14% variance. Whereas if you look at the overall standard deviation, it has come down to 11%. So this is risk or standard deviation. So these numbers, what I have given as standard deviation. So the standard deviation is 12 and 14 for individual stocks. But when you create a portfolio, because of correlation existing between them, the overall standard deviation of the portfolio is reduces to 11%. So this is something that you have to remember how portfolio variance is computed for 2 stocks. Now, how do we compute it for 3 stocks? For 3 stocks, see, for 2 stocks, I told you this is the formula. For 3 stocks, the formula is very similar. It is A plus B plus C whole square. Okay, I'm again telling you it is not actually A plus B plus C whole square, but it is something very similar to A plus B plus C whole square. What you have to do is A square plus B square plus C square plus 2AB in correlation of AB, correlation AB, correlation A comma B. Like that, you have to do 2AB correlation AB. 1 minute. Yeah, plus 2BC correlation BC, 2AC correlation AC. And A refers to W1 SD1 or W1 W of A and standard deviation of A. It refers to something like that. So I'll explain to you what this is. So let us say there are 3 stocks, A, B, and C. The weight of the 3 stocks in a portfolio totals up to 100%. So you'll have 20%, 30%, and 50%. So this totals up to 100, right? This totals up to 100%. Each stock has a return of 14, 12, and 13, and their respective standard deviations are 11%, 8%, and 9%. Given this, if let us say your correlation between A and B is 0.2, right, and A and C is minus 0.1, and B and C is 0.4, then how you compute the variance of this particular portfolio or a standard deviation of this particular portfolio is, you first plot all the correlations here. Between A and A, it is 1. A and B, it is 0.2. A and C, it is minus 0.1. Like that, B and A is 0.2. So if A and B correlation is 0.2, B and A correlation is also 0.2. So like that, you plot all the correlations here. Okay. Then what you do is you compute is equal to W1, that is weight 1, into sigma 1, that is standard deviation 1, whole square. Okay. You compute that. Okay. So then after computing the value for the cell where we are computing variance for A, which is basically W1 sigma 1 whole square. Now let us come for AB, right? AB is W1, which is A weight, into sigma 1, which is standard deviation of A, into W2, which is weight of B, into standard deviation of B, which is 8%, into the correlation between both of them.
So this is the AB value. So if you look at the formula we have, A square plus B square plus C square plus 2AB plus 2BC plus 2CA. Now here what I have computed is AB. Between A and B, I have multiplied the weights with the standard deviation and with the correlation between A and B. Now this is AB. Please note, when I am saying AB, it is not 2AB. Okay, so let me copy this and paste this. The covariance between A and B is going to be the same as covariance between B and A. So in this particular box or whatever you look at it, this matrix, A and B plus B and A is 2AB, right? So I am pasting it here between A and B and B and A, I am pasting the same value. This makes it 2AB. Now let us come to B square. What is B square? It is 30%, that is W1 into sigma 1 into correlation between B and B is 1 into W1 sigma 1, right? Same 30% into 8%. This can also be done as what we did for A, which is W1 sigma 1 whole square, right? Because anyway, one has, when you're multiplying something with 1, it doesn't add, there's no change, right? So it can be 30% into 8% whole square or 30 into 8 into 1 into 30 into 8. So that is what is the B square value. Now what is the C square value? C square value will be 50% into 9%, that is W1 into sigma 1 whole square. In this case, it will be W3, right? Because C is the third item or the third stock in this particular portfolio. Now let us come to AC. What is AC? AC is weight of A into standard deviation of A into weight of C, which is 50%, into standard deviation of C, which is 9%, into the correlation between them. What is the correlation? Minus 0.1. So this is the AC part. Now the value of this is same as value of CA, right? So I am copying and pasting it there, you are going to get the same value. So AC plus CA is 2AC or 2CA, you can call it, doesn't matter, whichever way, right? Next, coming to BC. What is BC? Is WB into sigma B, which is in standard deviation of B, into WC, which is weight of C, into standard deviation of C, whole thing, into the correlation between them. What is correlation between B and C? Correlation is actually 1, right? So you multiply it with 1. Correlation is 1 or no, correlation is 0.4. See, that is where I got confused. You shouldn't get confused. Correlation between B and C is 0.4. Right, I multiplied with a different number, right, 0.4. So this is 2BC term. Now to 2BC term is this is BC term again. BC is same as CB. So BC plus CB is 2BC. So when you look at this, you are eventually going to get A square, then B square, then C square, then 2AB with multiplied with the correlation between A and B, which is same as 2BA. Then you have AC and another AC here, which is 2AC, which is again multiplied by the correlation between A and C. Then BC multiplied by correlation between B and C, which is 0.4. Again CB, which is again multiplied by 0.4. So 2CB or 2BC. All of this summation, all the values that you have here are the variance covariances. You sum all of these, you get the overall variance of this particular portfolio. You do a square root of this, you are going to get the standard deviation. You are going to get the standard deviation, which is 4.5%. So friends, please note here, the individual stocks have standard deviations of 11%, 8% and 9%. But the overall portfolio has a standard deviation of 4.5%. Why is this important? Because this is exactly what I keep saying, that when you diversify, when you add more stocks to the portfolio and the stocks have low correlation, in fact, A and C have negative correlation, when one of them goes up and other one goes down, the overall return of the portfolio does not vary too much. As a consequence of which, the overall variation comes down. As a result of which, the standard deviation or the risk of the portfolio comes down. Okay, so even though individual stocks have 11, 8 and 9%, the overall standard deviation of the portfolio is 4.5%. Okay, fair enough. Let's move forward.
Now coming to something what I wanted to show to you, which is the key element of this particular discussion today. If I take two stocks which have return of 20 and 25% and standard deviation of 11 and 13%, I can put these two stocks in multiple ratios. I can have 10% in A, 90% in B, 20% in A, 80% in B, 30% in A, 70% in B. Like that, I can have in multiple combinations. And, I have taken a difference of only 10%, but you can have, infinitely small, 11, 17, 11, 89. 1288 like that, and you can again go 11.1 88 88.9. So you can keep on hair splitting it, but that doesn't solve any particular purpose. So here what I want to communicate is, if you were to take some ratios, 10 90 20 80, so on and so forth, beginning from 0 1 and ending at 1 0, and you compute a weighted return. What is a weighted return? Weighted return is simply the weight of a particular stock in the portfolio multiplied by its return, and plus weight of another stock in the portfolio multiplied by its return. So you'll get various weights. So when it is 0 1, when B is 100%, you will get a return of entire 25 return of the portfolio is same as the return of stock B. Whereas when A is 100%, the return of the portfolio is same as stock A. Now, if you compare, you plot all these returns, and you also plot all the variances or standard deviations. What are standard deviations here? 11% and 13%. Now, for this particular portfolio, if I were to compute a standard deviation, how will I get standard deviation? What is the formula here? Two stock variance. What did I say? Standard deviation is square root of W1 sigma 1 whole square plus W2 sigma 2 whole square plus 2 W1 W2 correlation into sigma 1 sigma 2. So, if I take correlation as -1, and then compute the standard deviation of this particular portfolio using that particular formula what we just discussed, I will get the portfolio standard deviation in this format. For what? For various weights of the portfolio at -1 as correlation, I will get these kind of standard deviations for the portfolio. I've computed this as a formula. You can do it on your own as well. Right. Same way, if I change this correlation from -1 to -0.5, the portfolio standard deviation is very different. Same way, if I change correlation to 0, the portfolio standard deviation will change. See, the first row, it is not changing. Why? Because the correlation is irrelevant, because the entire portfolio consists of only one stock called B. Same way, the last row also does not change. The reason is the portfolio standard deviation, correlation is irrelevant because the standard deviation of this particular entire portfolio is only for the standard deviation of stock A, which is 100%. So hence the standard deviation does not change when the entire portfolio consists of only one stock. Whereas the standard deviation of the portfolio changes when the stocks weights are different and the correlation between them constantly changes. So -1, 0.5, 0, 0.5 and +1. Now please note the correlation is a number which is between -1 and +1. Now like this, if I compute all the standard deviations and I plot them, then I draw a graph. Right, I draw a graph. Now, what is this graph? Here, the bottom, the x-axis is the standard deviation and the y-axis is the return. So, for various levels of standard deviation, what are the levels of returns? So, if you see this blue bar, right? This blue bar is basically when the correlation is -1. So, when the correlation is -1, you see this particular portfolio, when the correlation is -1, the return, the standard deviation is 1. You can see on the screen, the standard deviation is 1 and the return is 22.5. Let me go there. Where is the return? 22.5. I'll highlight this particular cell in some other color. You see now? At this point, when 50-50 is invested in both the stocks, the overall return of the portfolio is 22.5. See, if you invest in A, you get 20%. If you invest in B, you get 25%. If you invest half both the places, you are getting 22.5. So far it is logical. But if the correlation between both of them is -1, then the standard deviation, which is 11 in first case and 13 for the second stock, has come down to 1. So the standard deviation, which is supposed to be 13 for stock B and 11 for stock 1, has come down to 1. Why has it come down? Because the correlation between them is negative. The 2AB term, what we discussed, that also has correlation. That correlation is minus number. So A square plus B square minus 2AB. So what happens is the entire term gets reduced. So the diversification basically reduces the overall variance or risk or standard deviation. That is the key input. So if you look here, this the blue bar at the bottom, right? The first bar blue, and when correlation is -1, it has the lowest possible risk for the highest possible return. Now, if you see here, the last cell where the correlation is +1, the highest possible return is 25, and or you take one level lower, the highest possible return is 24.5, but the standard deviation is 12.8. You see here 12 point. This is what I am referring to. So here the return is 24.5, but the risk is 12.5. Whereas here the return is 22. The return has come down only slightly, but the risk has come down from 12.5 or 12.8 to 1. So this is the diversification of a portfolio, especially when the components of the portfolio have very, very low correlations, reduces the overall portfolio risk. That is the point to be noted. This is what I've been trying to actually, this is where I was getting at. The whole funda, what I've been trying to tell is, in that A plus B whole square formula, when 2AB term becomes negative, and when will it become negative? When correlation is negative. And when correlation is -1, that has the highest value for the term minus 2AB, and that reduces the overall value of the variance or the standard deviation of the portfolio. And I'm explaining to you mathematically, okay? And hence, because of that, the overall variability in the returns of the portfolio is the lowest possible. Now, if you have to understand this more from a logic perspective, how it will work is, when you have one stock that is going up and another stock that is coming down in a portfolio, the overall portfolio return does not change much. So the return, what is standard deviation? Variability in returns. How far are returns away from the mean? However, for the entire portfolio, one value goes up, one value comes down. So the overall value of the portfolio is not changed a lot, right? So if it is not changing a lot, then there is very low variability in the portfolio returns, and hence there is very low risk or low standard deviation in portfolio return. That is the logic, right? Now coming to the 3 stock portfolio, same thing like what I did, right? For 2 stocks, I did for 3 stocks. When I do for 3 stocks, I took multiple ratios, 0, 10, 0, 1, 0, then 0, 0, 1, 0, 0.9, 0.1. See, please note here, all summation of the weights equals 1. Okay, summation of all, so 100%, right? So summation of all weights equals 1. So here, the return of portfolio A, return of a stock A is 15%, stock B is 20%, stock C is 12%. However, the standard deviation of stock A is 20, stock B is 25, stock C is 16. And correlation between A and B is 0.2, B and C is 0.3, and A and C is 0.5. Given this, if I were to compute the return, what is portfolio return? Very simple. It is weighted average return, 15 into 0.2 plus 20 into 0.3 plus 12 into 0.5 multiplied by the respective weights of each of the stocks in the portfolio, right? Sorry, 15 into 0 plus 20 into 1 and 12 into 0. That is the formula, my bad. So you compute the returns, weighted average returns, by multiplying the weights with the returns of each particular stock in the portfolio. This is how I compute the return. How will I compute variance? I explained to you about that formula, W1, W2, sigma 1, sigma 2, all of that, right? A plus B plus C whole square formula, something like that. When I computed like that and computed the standard deviation, I'll get all the standard deviations. Now, I did this exercise for, I think, some 40, 50, or in fact, more than that, about 75 scenarios, where, I kept changing the ratio by 10%. And, first I reduced in A, then I reduced in B, then I reduced in C, so on and so forth, so that the overall weight of all 3 stocks put together is 100%. Like that, I computed the overall standard deviation of the portfolio and the return of the portfolio. And again, what I did after doing that, I plotted all of them in a specific chart. Now, when you look at this chart, this chart looks something like this. This is how this chart looks. Now, please note, in this chart, this point, right, this green line, what I've drawn, this green line, okay, that is known as the efficient frontier. Now, that line basically contains of all portfolios which have best possible return for a given amount of risk. What do I mean by that? Let us take this portfolio. This portfolio has a risk. So, x-axis is risk. Risk is denoted by standard deviation. And y-axis is return. Okay, return. Now, for a risk of 18.5, this guy is getting a return of 14.5. But just go up slightly, for a same risk of 18.5, there is somebody else who's getting a return of 18. So anybody who has common sense will choose this portfolio, which is giving you a higher return for a same level of risk. Or you can look at it other way. For a given return at 16%, right? Now at 16%, let me change the color. It will be easy for you to understand. For 16%, okay, for 16% return, at this point, you are getting a risk of 15 or so. At this point, you are getting a return of risk of 19. So for a return of 16%, why will I take a risk of 16% or 18%? I will take a risk only of 16%. So for a given level of return, you can choose the lowest risk, or for a given level of risk, you can choose the highest possible return. So those kind of lines, those kind of portfolios fall along this green, yellow line. So this particular thing is known as efficient frontier. Okay. So the portfolios that lie along this efficient frontier are supposed to be most efficient. Now, some of you might be wondering, what is all of this nonsense? Why are we discouraging all of this? This works in the markets. In market, when you create portfolios, people keep telling you, diversify your portfolio. Don't put all eggs in the same basket. Put in multiple stocks. They are telling you for this reason. What is the reason? When you have multiple stocks in a portfolio, some of them will move up, some of them will move down. On an overall basis, your portfolio value will not go down significantly or go up significantly. So the variance in the value of the portfolio is not high, and hence the risk is lower. That is what they're trying to tell you. This works in real markets. Please note, this is not some theoretical, some weird concept. There are limitations to this concept. I'm not saying no, but this actually works in real life. This works in real life. This particular concept is very, very important. Efficient frontier is an extremely important concept for somebody to understand why this is happening. And please note, how has this happened? This has happened because you have multiple weights, you have multiple correlations between those three stocks. Based on various weights and given correlations, you plotted various portfolios. Then certain portfolios lie on this efficient frontier. So you will ideally choose, if someone were to say, I am okay with a risk of 20%, then I will say for a risk of 20%, you should choose this portfolio which lies here. Okay, because that is the best portfolio of A, B, and C that you can get. Now, can I do this with 3 stocks, 4 stocks, 5 stocks, 10 stocks, 100 stocks? You can do it in any number of stocks. But then the covariance variance matrix will keep becoming longer, and you will need to keep finding out correlations between multiple stocks. So that is the only nuisance value in that. But you can keep doing this for any number of stocks. There is absolutely no limitation. Okay, so this is the concept that I wanted to take you guys through. Okay, so that is one thing. Now, just give me 1 sec. If anybody has any further questions, let me respond to those, and then we can go to the Q&A. This is the risk of the portfolio. Yes, Priya, this is the portfolio risk. The standard deviation of the portfolio is what we computed. Can you provide information about CFA program coaching? Yes, we provide CFA coaching online. Multiple views, unlimited views. You can take till exam date, Ranjit, and we give you physical books. We give you access to Kaplan material. We give you access to Kaplan website, and we are there always to solve your doubts. So if you need more information, Ranjit Chaudhary, please reach out to us at on our number. So I'm typing my number here, 9640111110 or support@indigolearn.com. My number's 9640. That also has a WhatsApp. Please specify this in. You can type a WhatsApp message and we'll respond. Sir, will we have this in CFA level 1? Kashish Mehta, this particular concept of portfolio variance is there in CA final SFM and in CFA level 1. Right. Varun Chandran, perfect negative and positive correlation. Yes, that is what I was discussing about. Ranjit Chaudhary, no information provided about CFA coaching. I explained everything here, and exam pattern also explained. You please go through. Please email us, Ranjit Chaudhary, at these email ID and phone number, and we will share a copy of this particular webinar to you. You can go through it. All the information has been provided. If you need information, reach out to us at these numbers. Then will you explain concepts using like this in Excel? Absolutely, Saurabh. A lot of work actually happens only in Excel, boss. Real life is all about Excel. Real life is not about this thing. And we also use something called as a CFA calculator. So if you're able to see, this is the calculator that we have. we'll be using both of these things in the classes. It will be largely, things like this, because the idea is, I hope you're able to see my screen. Are you able to see me also? Are you able to see the calculator? Can somebody respond? Okay, yes, we will explain using Excel and it is blurred. Okay, no problem. There is something called a CFA calculator and we use calculator as well as Excel. Things are explained like this only because sitting there and doing manual computation, A into B into C into D is waste of time. You are supposed to understand concepts and write them in the exam. You are not supposed to, there is no stepwise marking in CFA. CFA is more an MCQ exam. And yes, you have to, like Saurav is asking, we have to solve questions on computer. But the computer does not have a calculator. You have to have a manual, you have to have a CFA calculator, separate Texas Instrument calculator that you'll have to use. Guys, just hold on for 1 minute. May I know your name? Good question, Shiv. You first, I think this is a very good question. My name is Sriram. So I am a co-founder and CEO of IndigoLearn. I am the lead faculty for CFA. I am a CA. I am a CFA. I got my CFA charter in 2010-11. I'm also an ISB Hyderabad graduate. I have worked for 15 years so far in various organizations, 15 to 16 years in various organizations. I was a CFO of a startup. I was working in the stock markets. I was working in currency markets. I worked in financial modeling, so on and so forth. So when I'm telling you something, I am telling you with a lot of experience. MD is asking me, do we have these concepts in CA curriculum? Yes, in CA final, you have them. SFM chapter, you have these concepts. I know this is off topic. Please start teaching FSCM on IndigoLearn. There is no proper faculty. I know Pramod, but then once syllabus changes, FSCM chapter subject may not be there. Okay, so which is why we're not teaching it. It will be there for a very short period. We can't put so much effort for a one particular paper for which there are very few students. I understand you are interested in FSCM, but for us it doesn't make sense. Right, very few students across India. Most of the students are choosing law or something like that. Right. Anyway, so guys, now coming back to the main thing. This is about the specific thing about the quiz. Right. The quiz is straight from whatever I have taught so far. There is nothing that is outside the topic. Okay, everything is from what I have taught. So please don't worry about it too much. The question will be asked directly from what we have taught. I am going to share the link of that particular MCQ quiz to you. Just hold on for 1 sec. Okay. So everyone in the meeting, do we have paper exemption CFA after BCom and CA? CFA is a course MD where there are no exemptions. Everybody has to write all levels. Absolutely zero exemption. Okay, so I'm sharing a link to everyone. This is the link. Just hold on for 1 sec before I also show you one more slide. This is the last slide. To know more about us, visit this website onefin.in/CFA, or you can WhatsApp us, call us at 9640-111110, 5 1s and a 0. I am passing criteria. Good question. Passing criteria is if you get minimum 60 to 70 marks, 70% marks, you will pass. Okay, they don't actually disclose what is the pass percentage. Okay, it is not again a bell curve or relative grading, nothing like that. It's absolute marks only. Somewhere I've heard that 50 to 60 is the pass mark, but if you get 70, more or less confirm that you will pass. See, you only have how many MCQs? 90 MCQs in first. Total is 180 MCQs. That's all, right? So it is total is only 180 MCQs. Just 1 sec. How many times in a year? 4 times for level 1, 3 times for level 2, and 2 times for level 3. Okay, so I'll just open that particular sheet where we had this specific question. So you have 180 MCQs for level 1. So 90 MCQs in each session. Each session is 2 hours, 15 minutes. Okay, that is the thing. Guys, I think we have spent enough time. Let me share with you the MCQ test link. So I am sharing it to everyone in the chat window. This link will be open for 10 minutes. Please, solve this, and the top 3 winners based on the time will actually get a 200 rupees Amazon voucher. We'll reach out to you. and more intelligence or hard work. It is lot of hard work, little intelligence. You need basic intelligence of a BCom student, BCom pass student who's got 80-90 percentage in BCom or 75-80% in BCom, and after that it's all hard. You should have an interest for the subject. That is more important. Okay. I have shared the link, onefin.in/CFA quiz workshop. I am typing it here again. Please click on it. Let me know if anyone is facing any problem. It has some 6 odd questions. Please respond to those questions. If you feel anything is incorrect or anything like that, just respond. We will see what is there and then we will get back to you. Okay. So guys, this is the session. All the very best. So somebody has asked me a question: is ACCA with CA good investment? Yes, if you want to get a qualification that is accepted more around the world, then ACCA is a good investment. Yes, session is done. Somebody is asking me, Varun, I gave the quiz, session is done. How will our doubt solved when we buy recorded lectures without revision part? So you can always ask queries, over we create a WhatsApp group. You can ask queries in the WhatsApp group. We also have a doubt clearance forum, Varun, and we will respond in the doubt clearance forum on our website and app. We will also conduct specific sessions, doubt clearance sessions, even for people who don't buy with revision. For revision people, we conduct a separate live revision. That's all. But for doubt clearance, we will conduct a common doubt clearance session. Srihari, where will the test centers be? I think there are prometric test centers in 23 cities in India: Hyderabad, Chennai, Coimbatore, Vizag, Surat. Quite a few cities are there. Rupa, what is the minimum duration of attaining a CFA qualification? Yeah, theoretically, you can do it in 18 to 20 months. But most often than not, people do it in 24 months, Rupa. I don't think 18 months is possible given multiple things. But yes, theoretically 18 months. Okay, guys. So we'll wind up the session here. I don't see any further queries. I wish all of you all the very best and thanks a lot for participating in this. And very good night. See you.